We have Snap earnings numbers coming out. This is the first time ever. Cheryl Casoni's been looking into the numbers. What do they show?
Well, they're pretty rough, but we got to say the stock is down about 10% in after-hours trading right now. The first earnings report, as you mentioned, the earnings they lost at this point $2.31 a share, a loss of $2.31 a share. That's pretty rough. Revenue coming in at $149.6 million. Just to give you some context here, guys, the estimate was a loss of 19 cents. They lost $2.31 a share. Now, $2 billion of the losses they are attributing to stock-based compensation expenses, because this is a brand new company that went public. Obviously, employees and the the initial shareholders jumping in. Big thing though, really quick, active daily users. That was a very important number to see. It jumped 36% from last year. It's at 166 million. Remember, the only number we have to go off of, guys, for Snap was that 158 million we got from 2016.
Right.
Now they're up to 166. But nobody's liking this report right now.
Not at all. Right now, after hours, the stock is down 15%. Melissa.
All right, here now is Amish Shah and Sierra Maya, 360 managing partner, and Shana Glenzer, who is MakeOffices Chief Marketing Officer. Thanks to both of you for joining us. Amish, I'll start with you. I mean, that is a huge miss. They were looking for a loss of 19 cents. Instead, a loss of $2.31. Are you kidding?
Yeah, I'm going to go with Snap, Crackle, Pop. I think that's my theme today. Everybody was with Snap when they were the big IPO, went up 44%, traded 5% lower, and now it just took a big drop. If you look at the Crackle, Facebook did the same after the first earnings report. It went down, I believe it was around 11%. Twitter went down 24% after the first earnings. The difference between the two and the difference between Snapchat, where I'll get into the Pop, is Facebook popped back 2 quarters later, and now it's trading 4x. Of where it IPO'd. Twitter went down and never really recovered. It's about a third of the IPO. I think the pop with Snapchat will be in the future. I'm a big fan of the founder, Evan Spiegel, and all the products and everywhere they're going with this company for the future. I'm still bullish long term, though.
Really? Shana, what do you think? I mean, active daily users up 36%. Is that enough to make you feel good about this?
It's a good jump, but one number and bar that I was looking at, and that I think many others in the tech world were looking at, was a 200 million number that Facebook had touted last month about how many people were on their Facebook Stories competitor to Snapchat, and I don't think it got quite close enough there to feel as comfortable as we would have liked.
Jonathan Hoenig is still with us as well. Jonathan, what would be your first question on the call?
Why is this stock so sick, Melissa? I mean, at a time the Nasdaq's hit 31 new highs this year, just Netflix an all-time high today. Why is this big name so weak at a time it should be breaking out? The number I follow is the tape, the market itself. And with this collapse after the earnings, the stock is right there near its 52-week low. My fear is that you're going to see, now, unlike Facebook, a very hot IPO, a very weak follow-through. And keep in mind, that was a harbinger of the top back in March of 2000. All of a sudden, there's IPOs that have been exploding. So this, I think, especially at a time in which the market is so calm, the VIX is so low, this is a worrisome sign, I think, for stocks.
Yeah, but Jonathan,
hang on one second. I do want to hear that, but Cheryl Casoni has a little more color for us. Cheryl, what do you have?
It's not real good. Cash flow negative, $173 million cash flow negative, and also the hosting costs. One of the things about Snap we learned in the IPO from that first filing before the stock started trading was that they're paying out these huge contracts to other technology companies. That's really been hurting them. Cash flow negative, $173 million. Again, they're stuck in these contracts with these large Silicon Valley companies, and they can't get out of them, and that's really hurting the bottom line here.
All right.